you, the property owner, and your own best interest. My job is to teach and to educate people about the truth about how property insurance works. Insurance companies spend billions of dollars in advertising to make people believe things are true that are not true. My job is to sit down with you and give you an education and teach you about everything that's covered under your insurance policy. Excuse me, what is covered, what is not covered. People have no idea. The truth is, most people have damage in their home that's anywhere from thousands to tens of thousands of dollars staring them in the face. For most people, your home is your largest investment. When you take out that mortgage, you agree to do two things. You agree to pay the mortgage out on a timely basis. You also agree to maintain the value of your home. Most people are doing things to their home to improve the value. But when a tree falls on your house, when a pipe bursts or something bad happens, you actually have an insurable interest to maintain the value of that home. So you're responsible for getting the house back to pre-loss condition, pre-loss value, something the insurance companies don't have an interest in. However, they don't tell you that, and they play games. So if you know anybody who's ever had a claim, many times insurance companies pay you back in the water faucet, the dripping water, here a little bit here, there. We remind insurance companies multiple times an hour that our client has insurable interest. So not only will we get our clients 300 to 600% more, but we'll actually get them most or all their money up front. So we sit down with people and we teach people and we educate them. Many people will actually self-identify damages they had no idea. And we'll sit down with people because 90% of property policies, residential and commercial, are incorrect. They contain fiscal gaps ranging from tens to tens of thousands of dollars. The picture behind me is somebody who last August got hit, then the tree fell down. They called me in. I had to inform them they had a $16,000 deductible for wind damage. They had no idea that $16,000 deductible was saving them $5 a month. People's values are incorrect. There's all types of provisions and coverages that people should have or people don't need, and they have. I am a free service provided by the states that I work in to be a public advocate. You are not allowed to pay me anything other than buy me a cup of coffee. I get you money. I teach and I educate people. That is what I do. Thank you, Dennis.
Thank you. So let's get back to Aaron. Aaron, you want to talk a little bit about how the market is today and what's going on in the market and what your suggestions are for people?
Yeah, absolutely. As you all know and have heard, the market has been a little bit crazy this past year since COVID. It's been incredibly active. As Madari just mentioned, that interest rates have dropped. A lot of new people are coming into the market. We're seeing a lot of people coming into the New Jersey housing market from New York. We're seeing a big influx, which means that we've got more buyers than we have sellers. There aren't enough homes on the market, and we've got all of these buyers vying for those homes. You know, I've stood online on Saturday morning outside of a home with all of our agents, along with all of our clients waiting to get into houses. We were booked in 15-minute time slots, and the house sells in, you know, over the weekend for tens of thousands of dollars over the asking price. So it has been a wild ride, to say the least. You know, my office specifically works with Cardinal Financial, actually, and they're an incredible company. They've really helped us get our. They've really been able to get us a step ahead in our offers, because when you not only have a pre-approval, but also, you know, I've gone in with full commitments, you know, and underwritten commitments, things like that give you a step up in this market. We are seeing a little bit of a softening of the market. Things are slowing down a little bit. We're seeing more things come on the market. Things aren't selling as quickly as they were, but housing prices aren't necessarily dropping. We're just seeing everybody just kind of take a breath, I think. And I think the result of that is that buyers are starting to get a little bit more apprehensive about going in and waiving an inspection, waiving their appraisals, things like that. All of a sudden they're like, wait a second, maybe I should just wait a few months and see what happens. So I think buyers are backing off a little bit, hoping that mortgage rates stay at this kind of place that they're at. And I think we're going to start to see the market kind of slow down a little bit, going into 2022, which will be a good thing, I think. I think everybody needs, I don't think we can keep going at the pace that we were going without burning ourselves out. And, I don't know, Dennis, you could speak to this maybe, but, you don't want to end, you don't want buyers and homeowners ending up upside down on their homes and overcommitting funds and overpaying, and then they're not going to get their money back. I don't think that, personally, I don't think that we're in another bubble. I've spoken to a lot of real estate brokers and agents and things like that. And this is kind of a big question that a lot of people have is, are we going to be in a bubble and end up kind of the way we were in the mid 2000s? And the good thing is that we don't have the same irresponsible lending practices that we had back then. People have more equity in their homes now, and we don't have the same lending practices that we did back then. Things have changed quite a bit. So the belief is, and everything that I'm reading and researching and hearing and talking about with my colleagues, is that we're going to be okay. We're not in another bubble. I mean, I'm no. This is all the research that I've been doing and what I'm hearing pretty consistently from, people that have been in this industry 40, 50 years and brokers and research and things like that. But that's kind of what has been going on in the real estate market. It's been a little bit crazy, but I'm happy to say that things are slowing down a little bit. And I saw some nods there. So I think that there's some agreement there. You're seeing that as well, right, guys?
Excellent. Yep.
Yeah.
And as you said, I think it's a good slowing and a logical slowing so that it doesn't become into a bubble and burst. So that's excellent. So Midori, you want to talk a little bit more about what it is you're seeing from a lending side?
Can you hear me?
Yes, we can hear you now.
Perfect. So yeah, like Aaron said, I'm actually glad that she actually works with us, This goes to show. And then how she said it has been on fire, but slowly it has been slowing down. There's a bunch of different factors, but more or less how she said as well. A lot of people, I've seen people go 300,000 over asking on a house, and it's just insane. But I guess now what we've been doing is just part of our process, just try to educate the potential buyers. Tell them, listen, you might have to get a fixer upper instead of your dream house. That way you can have more equity down the line. Or instead of going for that single family, you can start off with the multifamily. Use your FHA on that and then move into a single family. That way you can have more income to make it easier on you. Because at the end of the day, we just trying to help these people, build their dream, which is buying a home, and we don't want them to go blindsided and then get into a bigger problem than they have to.
What would you say are the key factors if I'm going to go and I'm at square one, I want to start? What are the 3 or 4 things that I should have ready when I call you?
Thank you. That's actually one thing that we get a lot of questions on. So one is definitely your credit. As they say, the better the credit, the better your interest rate will be. We like to say if it's over 720, then you're in a great spot. We can qualify anything as low as 580 for first-time home buyers and 620 conventional. But if you can get over the 720 sweet spot, that'd be great for you. 2 years of work history is needed. Your recent income taxes from the last 2 years at least. And then you also have the last 30 days of your pay stubs and bank statements. That way, if you have everything ready, we'll be able to put everything into the system faster and we'll be able to pre-approve you. Also, in this market, it's recommended to have even a good amount of down payment, let's say between $20,000 to $30,000. But we also say to leave room for more because you never know what can happen. So if you need to wait 6 months to save up a bit more or another 6 months to pay down some credit cards to help with your debt to income ratio, we recommend you doing that. That way you can be in the best situation possible when you're buying a home.
Awesome. Awesome. And now, Robert, can you share a little bit more about, as a homeowner, I'm a new homeowner or I'm a longtime existing homeowner, a little bit more about what I should be looking for in my policies?
So what you should be looking for your policy with me or yourself is that you're properly covered. That's what I specialize. I'll sit down with somebody. So let's talk about what's covered under your insurance policy, Dennis, because people don't have a clue. Anything that's sudden and accidental or has happened within a reasonable period of time and is not specifically excluded on your policy is covered. Okay. Anytime water enters your home from above the ground, it has the potential to be insurable loss. I give you, also, here's something that most people have no clue. I find people tens of thousands of dollars on a regular basis. If you have a fireplace and you've used your fireplace on a regular basis, you probably have smoke damage. Insurance companies will pay tens and tens of thousands of dollars. Again, I'm not throwing any numbers out specifically. I find people money. Well, my fireplace is gas. Okay, does that gas fireplace been had maintenance in the last year or two? Because those fixtures, those elements in there, if they're not tuned up properly on an annual basis, that's going to cause actually more smoke in some cases than your fireplace. I want to look at what happened. Well, I had my heating system repaired because it was not working properly. Well, there's a chance that it's misfired and you have smoke all over the house. Smoke is a micro particle. Smoke gets into everything, including your pills, your food. It gets into everything. People have no idea. Ignorance is no excuse of the law when it comes to driving. But ignorance, stupidity, those are things that are covered. Your child comes home 3 hours, 2 o'clock in the morning with a 10:30 or 11 o'clock curfew. You start arguing with them and you punch a hole in the wall. That actually can be an insurable loss. One hole in the wall, does it make sense? No. But what happens if something comes crashing down, a piece of artwork or something on your dining room tables and destroys it, or you do it in multiple places? People have no idea. One chip, one crack is all it takes. Remember, I help you maintain the value of your property. I don't fix, I don't repair, I don't maintain, I don't upgrade, I don't match. So if you have one chip on your porcelain floor that's say 800 to 1,000 square feet because somebody dropped a pot, an iron cast pot, and you have a hole, the crack the size of a dime, I actually got somebody $18,000 for that, because the only way to properly repair that floor is to pull the whole floor up. It's one cement bed and replace the whole floor. Did my client repair that floor? The $18,000 I got them? My guess is no, but I don't care. I get you money to get your property back to pre-loss condition. I find money 75% of the time when I do policy reviews. So people need to be aware. Most people have never heard of a public adjuster. You may not need me today, but you may need me somewhere down the road, or you know somebody. I work with real estate agents, mortgage companies, contractors, anybody that has anything to do with physical property, are people that I want to partner with. I want to teach people, educate, and raise their educational bar. Thanks.
Excellent. Thank you. And then Robert, we'll start with you. What's the one thing you want people to remember from your presentation here today more than anything else?
That 90% of property insurance is incorrect, and that you should never, ever call your insurance company. Because if you call them with anything other than asking them to make a change in your policy, they will, in many cases, consider that a claim. It's called a non-payout claim. You always want to go to a public adjuster who's a free service, who does not notify the insurance company until you say it's okay and agree there's a claim. We're here to protect your best interest.
Thank you, sir. I know before I met you, I didn't even realize public adjusters were existed, and I
90%
definitely
of the population has no idea we exist. And the
and we
insurance
recommend you.
companies
I
want to keep
recommend
it
you
that way.
highly to everyone now. I mean, there's no reason not to, especially if something's happened in your house. So thank you
And we
so
have
much.
hurricanes. We have bad weather coming now. You know, the hurricanes, the storms, they're coming.
All right. Next up, we have Muldari. What is the one thing you want people to remember from your presentation here today?
What I want people to remember is buying a home is one of the biggest investments you're ever going to make. So you might as well do the best you can to make the process as smooth as possible. Whether it's working with your lender, your realtor, anybody involved, just try to have everything as ready as you can. Just know that there's going to be some bumps on the way, but that if everything goes smoothly, you'll be in your dream home, and that it doesn't have to stop there as well. You know, you can use your home you can do a cash out refinance to buy another house. There's so many possibilities. Just ask, and we'll be able to help you.
Excellent. And then finally, Aaron, what is the one thing you want people to take from here today?
Sure, I'll kind of mirror the same thing and the same theme. Realtors, you can't throw a stone without finding one, it feels like sometimes, but not all of us are the same. And it's important to find somebody that you trust, find somebody that's going to be working on your behalf and has your best interests at heart. I think that it makes the biggest difference. When somebody like me, I have a strong network of people that I work with. I have connections with home inspectors and mortgage lenders and, whoever I need, mold remediation, because you don't know what's going to come up, but you want to know that the people that you're working with are going to be able to problem solve and get you from point A to point B easily and without a lot of hiccups along the way, hopefully. Things are going to come up in the process, and God only knows what comes out of an inspection sometimes. We live in an area that has a lot of older homes. We have a lot of new construction too, but sometimes you're looking at homes that are 40, 50, 60, 70, 80 years old. A lot of things are going to come up, and it's really important to have the people, have the people at your side that are going to answer your call, be responsive, and help you navigate those things when they do come up.
Excellent. Thank you so much. And then I do have to apologize, Jake. I just realized I didn't have for some reason, I thought it was live streaming, but we didn't live stream the first piece. So since you still are on the screen, Jake, and we are live streaming now, want to give us a quick summary on what people should do as a homeowner when it comes to insurance, if you would.
As a homeowner, yeah. So a lot of times people end up rushing through that process because they know they need to get through close and their realtors on their back, their lenders on their back. Like, I need to get this now. Like, what have you been waiting for? We've been talking about it for 3 weeks. I see Aaron is nodding. So people kind of wait till the last minute, and then they're shopping around, but they're doing 800 other things trying to get the house closed. So they're really just like calling one person, just saying, okay, just give it to me. They're looking at the price and they're saying, okay, great, go with it. I see Robert's shaking his head too. So you get in a lot of trouble that way. As you can see, that person behind him ended up with a 3% wind and hail deductible, which they didn't even realize that they had. A lot of people have that because, certain companies don't even let you go less than 1% on that. So you really need to know what's in your policy. Do not wait until it's the last minute to go through it. And I also recommend going to a broker or an independent agent like myself who has many carriers to go through, because you don't pigeonhole yourself into what is available. It's what do you want and need, and then let's find what the best price is for that. So make sure that you do your due diligence and contact somebody else who's going to do all that work for you, like myself. So if you don't want to have to be calling 8 to 10 different carriers to find out, what they have, different nuances of their coverage, the agent's going to do all of that for you. So let them know what's important to you. They'll let you know things you probably didn't even know existed. And then together you can find the policy that fits best for your family and for the home that you're just buying now.
And one other point, Jake, I want to ask you, because I know I have a lot of customers that do this. I think people think that insurance companies put way more loyalty on pricing for people who've been there for a long time than that. I always like to say it's like the cable company. The longer you stay, the more they take advantage of you. It all goes to the new person, right? So, okay, you want to cover that as to why every 1, 2, or 3 years I should shop my policy?
Yeah, I mean, that's a good point, Dennis. And a lot of people, they said it, they forget it. Homeowners insurance is not something you're thinking out on a daily basis. Auto insurance, yes, sometimes you're like, oh, I'm paying this every month. Let me get it lowered because it's always too much money for me. But when you figure the homeowner side, there there's automatic inflation on those policies, mostly because they're covering the replacement cost of your home and materials are going up every single year. So they try to automatically inflate usually around 3% on the policy's dwelling coverage, so that you're having enough to cover if it was a total loss, things like that. But sometimes they overinflate too. So, you could have had the same policy with a carrier for 6, 7 years, and now it's overinflated by like $50,000 in coverage. You're able to review that, lower that coverage, because if it's over what your home is worth, you're not getting that extra money. They're not just going to pay you extra money because it's in the policy. They're going to evaluate how much it is to actually rebuild the home and then give you that amount. So you're not doing yourself any favors by over insuring it. So why not review it, make sure that first of all, it's still the best price that you're getting for that same type of coverage. You don't want to lower your coverage unless like I was saying, if it's over insured. But typically you don't want to drop anything just for a pricing thing. Like Robert was saying, a $5 a month extra, and they would have had probably $1,000 deductible instead of a $16,000 deductible. So, you really want to find where you can cut, expense, but you don't want to, nickel and dime yourself out of having a policy that's actually going to do something for you. So definitely
Hey, Jake,
shop around.
I got to jump in. I'm apologize. The other thing that is involved here is the insurance carriers every year change your policy. They're adding more and more limitations to your policies. That's something that you won't know without having somebody review, like somebody like Jake, who is an independent insurance agent, has a fiduciary responsibility to you, can shop your policy out. So I wanted to throw out, Dennis, one little secret that people don't realize. When you do have a claim and you get contacted by an adjuster for the insurance company, he is not on your side. That guy gets paid twice. He gets paid a salary, and he also gets incentivized by how many times he can deny claims and how little he can get away with offering you to make you go away. But when you use somebody like an independent, like Jake, he's going to shop you around. In general, we recommend not to use somebody who advertises on TV because you're paying for it somehow. Jake has got contacts with all these kinds of insurance companies who offer better policies with better coverage at a very competitive rate. His job as an independent is to look after you and shop your policies around.
And then when they have the claim, they call Robert first.
Yes. Although I'll probably direct them to Robert. So
Awesome. Well, great job, everyone here today. I appreciate you guys taking the time to share this wisdom with everyone out there. And again, this is Relax Teams. We get together as an organization to make each other's businesses stronger, to help grow each other, and most important, to share our knowledge with the public and let people learn. So feel free to stop by any Wednesday morning. You can check out our site, relaxteams.com. Hope you learned some things here today, and hope you work with some of these professionals that we featured here today. And most important,
and also our in-person event is on the 31st.
We have a live in-person event in Bound Brook, New Jersey at Ray's Bistro. That's Tuesday from 5 to 8. Jake, you want to talk about that real quick?
Yeah, sure. So we're going to be getting together in person. Most of our stuff is virtual, so we're all very excited to be mingling in person now. We're going to invite guests. So if you have anyone that you want to invite in the local Bound Brook area, definitely invite them. $20 gets you into the event, gets you your full meal. It includes dessert, drinks, all that good stuff. It is BYOB, but all your typical G-rated beverages are on the house. So if you are interested in coming, just get in touch with either myself or Dennis. You can show up the day of at the door, but we prefer that you RSVP if possible.
Yeah, because I will be bringing some extra beer and wine. I want to make sure we have enough for you. So with that said, and everyone, do not forget about Arm in Arm. What an awesome organization, a wonderful group out of Mercer County. You want to check them out as well. A wonderful, they've done so much through the pandemic and beyond. So we look forward to supporting all of our local nonprofits like Arm in Arm. Thanks, everyone. Have a great day and enjoy.
Thank you.
Thank you.
Guys.
Thank you. Bye, guys.
Thanks for everything. This is great.
Enjoy. Thanks for attending, Paul.